In this session, let us discuss about Sukuk structures. So let us try to understand some basic important points in a Sukuk. So for example, let us consider this. Now, this could be a company, when I say company, this could be any kind of company which is involved in production, distribution. This could be a financial institution. And this could be, for example, a sovereign. Meaning to say, this could be a country. And we understand that each one of them have their own financial needs. A country would require funds for many different activities. A company would require funds. A financial institution would require funds. So in a Sukuk structure, generally, these are the main obligors or the clients who would require funding. The best option for them to do is to issue a Sukuk. For example, if a company wants to raise liquidity globally and have a very competitive pricing, they may look at going and issuing a Sukuk. For example, if there is a financial institution which is majorly an Islamic financial institution and would like to raise funds from the market, an easy and more acceptable and more commercially viable source would be to issue a Sukuk. So we have to understand that the first important aspect, or the most important, stakeholder in a Sukuk is the obligor or the customer who would want to raise funds for its own financial needs. Having said this, the next step is how this sovereign or a company or a financial institution can raise a fund through a Sukuk, and what are the main questions which they have to address before thinking of issuing a Sukuk. The first main important point is that we need to think is that what is the asset? So as we were discussing, Sukuk asset. We understand that in every Sukuk there has to be an asset. And what are the basic elements which are important in terms of asset are, number one, this asset has to be qualified. What it means is that we should be in a position to very clearly describe what exactly the asset is, where exactly the asset is. It has to be quantified. What it means is that we need to know the specifications of the asset. For example, if the asset is a real estate asset, we should know what is the size of the real estate, what is the shape of the real estate, so on and so forth. It needs to be quantified. Or if it is or if it's a murabaha sukuk where we are selling certain commodities, so we need to know the quantity of the commodity which is being sold. So it needs to be quantified. The other is, this asset needs to have a value. What it means is that, for example, you cannot use barren land, or you cannot use something which has no marketable value as an underlying asset in a sukuk. So whatever you use as an asset in a sukuk needs to have a value. The other important point for the sukuk asset is that it has to be revenue generating. Especially this becomes more important in an asset-based sukuk. So for example, if it's an ijara-based sukuk, what we mean is that this asset should be leased back to the obligor so that this asset generates certain income, which income could be shared with the investors. So this asset has to be revenue generating. Now, in terms of whether the asset could be tangible or intangible, we have seen that the asset can either be a tangible asset or it can be an intangible asset. When I say it can be a tangible asset, here I'm talking about the nature of the asset. So we are talking about the real estate. We have also seen intangible assets, for example, in terms of some of the sukuks which were issued by some of the institutions and sovereigns, that the assets were intangible, for example, like marketing rights or certain concession agreements. So what we are trying to say is that in terms of the nature of the assets could either be tangible or could be intangible. But what we have to be very clear is that they have to be qualified, quantified, they need to have a value, and they have to be revenue generating. So if the asset qualifies these things, then it could be used as an underlying asset in a sukuk transaction. Otherwise, it cannot be used as an underlying asset in a sukuk transaction. So for example, you cannot use a barren piece of land as an underlying asset in a sukuk. For example, if you are not able to qualify what exactly that asset is, then you cannot use that in a sukuk to structure a sukuk, or you are not able to quantify it. Even then, then you will not be able to use that in a sukuk as a sukuk asset. Let us here discuss about now, to issue a sukuk, generally or majorly, what we have seen is that there is an SPV. Okay, so for example, if this is an SPV, SPV stands for Special Purpose Vehicle. What it means is that in commercial transactions or in big ticket financing transactions, generally a shell company is created for the purpose of the financing or the purpose of the structure of this specific financing. So to take an example, so if there is a company, and if this company wants to issue a sukuk, then this company cannot directly go and raise funds, but this company has to raise funds through a structure in the form of a company, which will be a special purpose vehicle. What are the advantages? The main advantages for forming a special purpose vehicle is that in a special purpose vehicle, there are no taxation issues, because generally the special purpose vehicles are set up in tax-free zones. That is the one main advantage. The other main advantage of forming an SPV is the company which wants to issue a sukuk. If this company goes bankrupt, then that bankruptcy will not affect the transaction. The transaction, because the financing has been raised through an SPV, and hence this SPV is bankruptcy remote. So that is the other main advantage, meaning to say bankruptcy remote. These are the two main reasons why an SPV is used to issue a sukuk and not directly a company issues a sukuk.